Hello and welcome to this Monday's weekly market briefing. We've got a lot to talk about, but firstly, Israel weighs response to unprecedented attack by Iran, as well as that Chinese Coast Guard vessel blocks Philippines vessel as maritime tensions do grow. And lastly, Europe trails China and the US after monumental energy mistakes, says the IEA's chief. We've got a lot to talk about on the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with Israel and Iran. Now, Israel's war cabinet has now met to discuss the possible responses to Saturday's Iranian drone and missile attack, with Biden calling for restraint as the Middle East moves closer to an all-out regional war. This comes following Iran launching a drone and cruise missile attack from its own territory to attack Israel for the first time ever. Now, this, of course, is a very, very significant article here over a very important topic to discuss. Now, obviously, those that have been watching this channel for some time know that we've been covering the conflicts within the Middle East, of course, since the October the 7th massacre, where Hamas did massacre many Israeli civilians and soldiers. And since then, of course, Israel has launched its own air, naval and land campaign and offensive into the Gaza Strip, with that resulting, of course, in a great humanitarian disaster, both on the civilian front, but in the process, of course, the IDF has been able to eliminate certain Hamas strongholds. So that's kind of the situation that we've been covering up to this point, of course. Now, what's really happened on the side of Iran, though, is, of course, Iran is a key kind of head of the kind of umbrella to a great deal of proxy networks within the Middle East. The Iranian kind of military command kind of owns and kind of commands these proxy networks of Shia militia groups across the Middle East. For example, Hamas is one of them. And so we know that a great deal of weapons within Hamas's kind of strongholds and storages are ultimately from Iran in some way or another. And we know as well that the Houthis, for example, in Yemen are also, receive great funding and large amounts of military support. And we know, of course, the Houthis have been attacking Israel with their own drones and missiles that Iran has provided them with. And also the Houthis have been using such military equipment to attack civilian maritime vessels within the Red Sea and Gulf of Aden. As well as that, of course, the Hezbollah in Lebanon and Syria, of course, is also funded by Iran, is another one of those Shia militia networks, and ultimately has been attacking Israel both in the Golan Heights and, of course, on the northern border with Lebanon and Israel. And we know, of course, that Israel therefore has had to station a great deal of troops on that border and has even engaged in clashes on that border with Hezbollah, and that obviously going both ways. As well as that, of course, we have other networks in Iraq and Syria, and we know that those networks have also attacked US bases and have prompted US retaliatory strikes on key Iranian proxy network strongholds as well in the Middle East. So ultimately, this conflict has been vast, great and very large civilian and human casualty death tolls, of course, and as a result, a great deal of destruction has taken place within the Middle East, and ultimately this has kind of caused a great deal of condemnation from certain Israeli allies, which maybe you would usually support Israel. However, these allies have actually started to now condemn Israeli actions within the Gaza Strip, for example. And we know, of course, that certain legal proceedings, international legal proceedings, have tried to take place. We haven't really seen anything come to avail from that, and we know that Biden is trying to urge Netanyahu, of course, to not embark on the rougher offensive within the Gaza Strip, which he says will create a great deal of humanitarian casualties and that kind of thing. Now, A key thing, though, that of course we have to note in regards to this Iranian attack on Israeli territory is obviously this comes following the Israeli strike on the Iranian consulate in Damascus, Syria, where, of course, numerous Iranian military commanders were essentially killed and taken out. And it seems like, Iran since then have kind of been warning Israel and calling out the fact that they are going to attack Israel at some point. Now, we kind of expected that to take place a week or two ago, I believe. But ultimately, it's taken until this point to where Iran has now decided to embark on this attack. Now, why are we kind of talking about this? Well, I think it's so important to not only note for understanding what's going on with the world and the key conflicts, but ultimately in relation to markets, this will have an insane effect as we enter the new week. We are likely to see oil as a result of this, kind of Middle East tensions rising. Basically, we're expecting to see oil's price rise dramatically, as well as that, we definitely have some upside potential now for the dollar as a result of this conflict as well. As we know, the dollar is kind of the powerhouse currency of the world, and therefore in these times of conflict it can become a safe haven asset. Gold is another safe haven asset which we're likely to now see a great deal of bullish support kind of emerge within as a result of this conflict. So ultimately, we've got many kind of trading opportunities which are arising, or at least market ideas which could be formulating as a result of kind of this conflict which is now taking place, which is likely to kind of escalate now between Israel and Iran. So that's kind of the key note in regards to how this relates to markets. Now, this attack by Iran was in response to a suspected Israeli strike in Damascus, which took out several key Iranian military commanders. According to the FT sources, Netanyahu is pondering the decision of whether to go big against Iran or just respond in a more measured way, with this also including a great deal of discussions between Israel and their allies. Biden and the US National Security Council's spokesperson both said that they don't want an escalation in the conflict between the two powers. Israel reported that during the Iranian aerial attack, more than 300 projectiles had been fired into Israeli airspace, including 170 drones and 30 cruise missiles and 120 ballistic missiles, with Iranian proxy networks in Lebanon, Iraq and Yemen also firing missiles. According to the IDF spokesperson, 99% of the projectiles had been intercepted. So a very important article here, and one article which is very important to read and understand as we enter this new week, with this conflict likely to affect markets a great amount. That's all to talk about in this article, though. Next article to talk about is to do with the Chinese Coast Guard. So another article on the topic of world tensions. Now, a Chinese Coast Guard vessel has now blocked 2 Filipino government ships for a number of hours. This marks a significant escalation between the two nations. Now, of course, this has also been a key topic in regards to world tensions that we've been covering extensively. And the reason why, of course, is, the risk always which is hanging over the potential Chinese invasion into Taiwan. We know that Xi Jinping and his allies have, of course, warned Taiwan that if, they do not kind of start engaging in deals and negotiations in regards to kind of returning to China, if China is forced to, they will have to resort to an invasion into Taiwan to reclaim Taiwan to its territory once again. So that's kind of been the kind of key topic in regards to tensions within the South China Sea. But we also know, of course, that China has kind of been not only messing with the maritime vessels of both the Philippines and Vietnam, but also China's kind of tried to expand its influence and territory within the South China Sea for quite some time now. And this has kind of increased in frequency and significance over the past few years and months. And what we're seeing here seems to be another example of China trying to do that, and as a result, intervening and messing with the Philippines' own military, which of course always creates this kind of risk of somehow a conflict breaking out. Now, I think this is such an important article to also note, because we also know, as we've spoken about in articles on previous days last week, is of course the AUKUS alliance is looking to expand. It's looking to bring in the likes of Japan, and we've also heard comments from Biden around the possibility of the Philippines kind of working with AUKUS as well. And that seems to be the alliance which is now forming within Southeast Asia and Asia in general, in an effort to kind of keep China at bay, in the same way that NATO acts in a way to keep Russia at bay. So ultimately, we're seeing those growing alliances within East Asia, and we know that the kind of goal of this is to kind of keep China at bay, and there's always that risk of China then invading Taiwan and these kind of allies getting pulled into it somehow. So that's kind of been the key worry. And as we know, last week, the first ever Japanese and Philippines summit was of course hosted in the US, and it does seem like this effort by China was to kind of retaliate against that kind of summit. Now, with the Chinese operation taking place on Saturday night, only 35 nautical miles from the Philippines coastline, and comes in reaction to the US pulling the Philippines closer as an ally against China. Satellite imagery shows that the Chinese vessel stopped both a Philippine maritime vessel and an escort ship just at the boundary of a sea border between the two, with the Filipino vessels stopping for more than 8 hours before continuing on their journeys. Oddly, neither the Philippines nor China has commented on the incident just yet. Last week, the first ever US, Japan and the Philippines summit was hosted in the US, with their respective leaders meeting and discussing the issues within the South China Sea. This meeting seems to be the reason for China embarking on this naval operation. So very significant article here to note on a very significant topic. Definitely keep your eyes on the South China Sea. World tensions are obviously growing, both in the Middle East, as we just spoke about, and also in the South China Sea. And we know, of course, Russia is still engaging with Ukraine within Ukraine's territory. So, that's also a very key conflict to note. That's all to talk about in this article. The last article to talk about is to do with Europe and its kind of competitiveness and the key mistakes that Europe is making, according to the IEA chief. Now, the IEA chief has now criticised Europe for making two historic monumental mistakes in its energy policy, that being relying on Russian gas and turning away from nuclear power. This was cited as the reason that Europe is falling behind China and the US, according to the IEA chief. With this also coming at a time where the EU leaders are preparing to debate on the matter of how the EU can improve their economic competitiveness. The EU currently trails both China and the US in areas such as manufacturing of clean technologies as a result of extensive regulations and high energy prices. With the electricity prices in the EU now being twice to 3 times higher than in the US. Progress is being made in the EU's energy sector, however, with the EU making a successful shift away from Russian gas since 2022, and in 2023, the EU produced more electricity from wind power than gas for the very first time, with gas from Russia previously making up more than 40% of the EU's supplies, but now only 15% in 2024. The key to avoiding energy blackouts thus far in the EU has been supplies from Norway and the US, which have accounted for more than 30% and 19% of imports respectively. The key debate in the EU energy sector now, however, is over nuclear power, with Germany, Austria and Luxembourg strongly opposed to the idea. So a very important article once again in regards to oil and Europe and China and the US. And we've covered this topic of European competitiveness before, and this is kind of adding to it, and we're now hearing these key figures within the economic space now talking on the issue. So very important topic there, and one to keep your eyes on. That's all to talk about in the articles, though. Lastly to talk about, of course, is the is, of course, the charts, where we do know a lot is happening, and there's a great deal of potential for things to happen going into the new week. Now, of course, we are beginning with the US indices and US equities indexes, with the first, of course, being the Dow Jones to cover. Now, of course, we covered the Dow Jones extensively. We cover it extensively every morning market briefing, but ultimately, last week we were talking about the US 30 in a way which we don't usually, which is that basically, the US 30 is kind of in this bearish spot now, and US equities in general are kind of in this bearish position now, where basically, we're seeing the Fed kind of position itself into a more hawkish position going into the year. We're not expecting any rate cuts at least until the second half of the year, with the first rate cut expected around November, which is very, very late, and we're expecting now only one or maybe 2 rate cuts this year, 0.25 percentage point rate cuts this year, and this is in comparison to the start of the year where we're expecting 6 to 7 rate cuts from the Fed. So, a significant change, and, very hawkish rhetoric now coming up from the Fed, and we know that inflation is staying persistent within the US economy, and that's something that the Fed's going to have to deal with for a very long time. So that's kind of the key rhetoric and topics which are weighing on the US 30 at the moment, and that's why we're now seeing this kind of bearish trend to the downside, with price now making its way down to levels not seen since January of the very start of this year, and we're now not far from these old all-time high levels which we only reclaimed back in last December. So most certainly we're seeing this significant sell-off now take place on the US 30 and other US equity indexes, and we still have a great deal of downside potential, as ultimately, should this economic data continue to show that inflation is being persistent, that the Fed is going to have to keep rates higher for longer to bring inflation down, then ultimately there's no reason why bullish momentum should return back into the US equities market. So we're certainly now in this kind of bearish market for US equities. Now the question will be for this week though, whether the news from the Middle East in regards to Israel and Iran will affect US equities and push US equities further to the downside as a result of world tensions increasing, and as a result increasing price volatility and that kind of thing. So that's the key thing to look out for. Should price set itself up to continue further to the downside, we obviously have that 50% Fibonacci retracement level lining up with that key liquidity zone, and we've got lots of downside potential to definitely know for price. So definitely keep your eyes on US equity indexes. Next to talk about though, of course, is the dollar, which has seen a great deal of bullish momentum as a result of this more hawkish rhetoric that we're hearing from the Fed, and this data which is showing that the Fed is going to have to keep rates higher for longer. What does this mean for the dollar though going into the new week? Well, of course, we have the conflict in the Middle East and the escalating, the potentials of escalation and the higher world tensions obviously mean that something like the dollar is shaping up to be a very nice safe haven asset. We know that the Fed is likely to reduce interest rates last out of all the kind of key central banks, and we also know, of course, that the dollar is kind of the powerhouse currency of the world. It's the safe haven currency of the world. So in times of conflict, people put their money in the dollar. So we've got lots of upside potential still for the dollar, and price is now certainly making its way back up to these levels not seen since October. So lots to look out for the dollar this week on the bullish side. Next to talk about though, still on top of the dollar, is Euro USD, which just kind of reversing the image of the dollar, also has a great deal of downside potential. We're getting the Eurozone inflation rate figure this week, as well as the US inflation rate figure. So of course, pardon me, I don't think we're getting the US inflation rate figure, but we are getting the Eurozone inflation rate figure, so that will certainly be playing into the way that the Euro does move this week. But the way things are shaping up, we've certainly got a great deal of downside potential, with price certainly setting itself up in a position where it could make its way down to levels last seen in October of last year, and possibly even further than that should inflation persist within the US. So certainly lots to keep your eyes on for for Euro USD, and lots to look out for. On pound yen, we are getting the British inflation rate figure and Japanese inflation rate figure this week, and price has just reacted to this key liquidity level. So commonly we might expect price to then rise from that level, but obviously with the data that we are receiving this week, price may move to the side in preparation to hear that data. Next to talk about though is of course Bitcoin, which over the weekend has sold off significantly, making its way back down to $64,000 per Bitcoin, which is taking us back to those 22nd of March levels. So price was not able to break above those previous highs. The question is, of course, however, it does seem that basically, the rhetoric from the Fed is also weighing on Bitcoin, which is reducing the kind of bullish momentum that we were seeing in Bitcoin pre this kind of change in rhetoric from the Fed. Lastly to talk about, of course, is gold and oil. Gold, to begin with, though, has, of course, a great deal of upside potential as we enter the new week as a result of this kind of conflict which is now emerging within the Middle East. As, of course, any kind of world tensions is bullish momentum basically for gold usually, just because gold is that key safe haven asset of the world. And lastly, but most importantly, arguably, is oil, which of course has an insane upside potential now as a result of this growing tensions within the Middle East. A regional war, of course, could cause oil's price to even go as high as $150 a barrel. That is what we've previously heard from key economists. So there's certainly a great deal of upside potential on oil at the moment, and an oil crisis is definitely on the cards should a regional conflict break out and start pulling in powers like Saudi Arabia, Israel, Iran, Lebanon, Syria, that kind of thing. So lots to look out for on oil this week. That's all to talk about in the charts. So lastly to talk about, of course, is the economic calendar, where we're getting a great deal of data this week, and lots of very important data, but I'll have to get through it quickly. Firstly, we're getting the US retail sales figure, followed by the Chinese GDP growth rate figure, and then the British unemployment rate figure. Followed by that, we're getting the Eurozone and German economic sentiment figure, and the Canadian inflation rate figure. Followed by that, the British inflation rate figure and Eurozone inflation rate figure. And then finally, we're getting the Aussie unemployment rate figure, as well as the Japanese inflation rate figure to end off the week. That's all the key economic data that we are getting this week. Lots to listen out for, though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading weekend, great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.